Welcome back to Bourbon Hunter, the channel where we chase great bottles, break down bourbon myths, and occasionally make some questionable life choices, all in the name of whiskey research. Here, we're diving into the stories behind the bottles, the trends shaking up the bourbon world, and the pours that'll make you say, yep, that's going on the top shelf. So grab a glass, settle in, and let's hunt some flavor, because around here, the bourbon's bold, the jokes are bad, and the hunt is always on. So, if you're anything like me, or you just happen to live in whatever bourbon dead zone my area has apparently become, you might be noticing something a little weird this year. All those glorious allocated bottles we were tripping over during OND last year, yeah, they've pulled a full on Houdini in 2025. And before anyone asks, I live in Illinois. No, not Chicago. I'm in Southern Illinois, basically the no man's land wedged between Paducah, Kentucky, and St. Louis. Chicago is like 6 hours north of me. Might as well be Canada. Last year, last year was magical. I'd walk into a store, casually bump into a Weller CYPB, Stag Jr., Forester 1924, E.H. Taylor Uncut and Unfiltered, Old Rip, Orphan Barrels, Caribou Crossing, Hancock's, Elmer T. Lee. This year, silence. Tumbleweeds. Maybe a sad looking fireball display judging me from the corner. And I was ready this year. October hit, and I was out the door like it was Black Friday at Costco. But every store that used to have at least something, empty. The employees, confused. The managers, confused. Even the GMs, the people who usually know everything, are just shrugging at me like, I don't know. Bourbon? Never heard of her. Meanwhile, on social media, I'm seeing other states posting cases, literal cases of allocations hitting shelves. And here, I'm starting to wonder if Illinois got put on some kind of bourbon timeout. I check in with 5 different locally owned shops. These are places where they know my face, my name, and probably my most embarrassing purchases. First, they told me, oh yeah, check the week before November. Nothing. Then maybe second week of December, I did my rounds today, and guess what? Absolutely nothing. So I did what any rational, increasingly irritated bourbon hunter would do. I started digging, and what I found might explain what the heck is going on this season. If you're also sitting in a dry allocation desert wondering who stole Christmas, this episode is for you. The short answer is the bourbon market is not crashing in the dramatic sense of a total market collapse, but it is undergoing a notable slowdown and correction. Bourbon sales in the US were down modestly in the year through mid 2025, showing slower growth than during the pandemic boom, but not a collapse. Premium segments are holding up better than lower tiers. Kentucky distillers are sitting on record high inventories of aging bourbon barrels, which points to oversupply relative to current demand. Broader whiskey inventories have also increased significantly while demand has stagnated. Craft spirits and smaller distillers have seen sales decline and closures, and barrels are selling at much lower prices than in recent boom years. This has added to supply pressure and some financial distress in the sector. Economic stress is pushing consumers away from high-end bourbon to cheaper options, part of a wider trend in the alcohol market. But it's not a full crash. Experts are calling this a correction. Most analysts describe the current bourbon market downturn as a natural correction following a decade of explosive growth, not a collapse. Over the past 10 to 12 years, bourbon demand surged at a rate that far outpaced historical norms, driven by social media, FOMO culture, international expansion, and unprecedented collector speculation. That level of hype was unsustainable, and economics argues that the market is simply returning to a more realistic growth rate rather than falling apart. Industry commentary points out that the bourbon boom inflated prices, secondary evaluations, and bottle hoarding, similar to what happened with sneakers, sports cards, and Pokemon during their speculative bubbles. Now, as supply increases and the initial frenzy cools, the market is entering a post-mania phase. Experts from the spirits business note that this is a normalization period after prolonged expansion, with distilleries finally catching up to demand and consumers becoming more price sensitive. Production capacity has skyrocketed. Major distilleries have spent hundreds of millions on warehouse expansions, new stills, and increased barrel output. This means the scarcity that fueled the boom is easing, leading to more shelf availability and less desperation buying. More supply equals less frenzy equals flatter secondary prices. Secondary market is softening, and that's a key sign of correction rather than collapse. So blue chip bottles like BTAC, Pappy, Birthday Bourbon, Russell's limited edition, Four Roses limited edition still move, but slower and at more rational price points. Middle tier and hype bottles, which depended on the FOMO wave, are the ones dropping fastest, a classic sign of speculative normalization. Consumer behavior has shifted too. Drinkers are now buying less impulsively, chasing value over hype, exploring craft brands, and pushing back against inflated store pricing. This doesn't signal a market downfall. It signals a more mature, price-conscious bourbon culture. The long-term outlook remains positive. Experts emphasize that bourbon has a strong global demand. It continues to grow in Europe and Asia. It retains a loyal domestic base and benefits from whiskey multi-years aging cycle, which naturally limits oversupply. These factors all support steady future growth, even if the days of flipping $50 bottles for $400 are gone. Think of it like the housing market. Cooling after interest rates go up, not a crash, just realism returning. For serious collectors and drinkers, this correction is actually healthy. Bottles become more accessible, pricing becomes more honest, and the entire ecosystem becomes more sustainable. Major brands are still performing. Large companies in the broader spirits market continue to report solid sales and maintain financial targets despite headwinds, suggesting resilience is at the top end. So what's driving the shift? Oversupply, demand normalization, economic pressures, changing taste, and global trade. Those tariffs and export challenges have hit international demand. Correction and recalibration, the market is adjusting after years of rapid growth. Greater supply than demand right now, putting pricing pressure on stocks, barrels, and some brands. Premium and established bourbon still strong. The biggest brands and high-quality offerings are holding value better than small craft producers. Again, not a crash in the financial sense, but a cooling off and a structural shift that's likely to reshape how bourbon is produced, marketed, and consumed going forward. So what in the hell does bourbon market correction actually mean for buyers? Short term, which is right now to the next 12 months, prices for mini bottles are softening, especially for mid-tier allocated bottles like E.H. Taylor Small Batch, Weller Special Reserve, 1792 Full Proof, Maker's Private Selections. Limited editions that used to spike are no longer selling instantly. The flipping market has cooled. For several years, the secondary market for bourbon was red hot. Bottles could be bought at retail and flipped online or in-store for 3 to 10 times more the original price. However, that feverish activity has slowed dramatically. Platforms like Whiskey Exchange, Caskers, and local Facebook Discord groups report far fewer sales at sky-high premiums. Collectors and casual buyers alike are more cautious, and many speculative flippers have exited the market after losing money on overhyped bottles. The frenzied buy now or regret forever mentality that drove prices up is now a shadow of its former self. Resellers definitely overbought in 2020 to 2023. During the pandemic era boom, resellers stockpiled allocated bottles like Weller, E.H. Taylor, Four Roses Private Selections, expecting endless price appreciation. Once the market stabilized and some hype buyers left, these oversupplied bottles began to saturate the secondary market. The resulting increase in available inventory naturally cooled prices and broke the cycle of rapid flipping. So there's been more supply, fewer crazy markups. Distilleries have expanded production and warehouses now contain more aged barrels than ever before. Allocated bottles that were once nearly impossible to find, such as Old Forester Birthday Bourbon or certain Buffalo Trace store picks, are slowly reaching more shelves. As scarcity diminishes, the outrageous markups seen in prior years are no longer sustainable. Stores that once sold a $50 bottle for $300 now have less leverage to maintain those prices. And secondary buyers are less willing to pay inflated sums. Younger drinkers could care less about bourbon hype. The newest generation of bourbon enthusiasts, millennials and Gen Z, tend to prioritize experience, flavor, and accessibility over chasing rare bottles or flipping it for profit. Social media trends still influence some hype, but younger consumers are more experimental with craft brands, cocktails, and affordable high quality bourbons. This cultural shift has reduced the number of buyers willing to fuel unsustainable secondary prices. So, what should we expect in the short term? Secondary prices stabilizing or dropping. Bottles that were once sold above MSRP for hundreds of dollars are now leveling off, with many losing 10 to 30% of their previous inflated value. Even high demand bottles are seeing slower turnover, which signals a healthier, more predictable market. More hunted bottles sitting on shelves longer. Whereas previously certain bottles sold out within hours or days, bottles now linger in stores for weeks or months. Collectors and enthusiasts finally have time to locate and purchase their favorites without panic, which is a stark contrast to the frenzied market of 2020 to 2023. So, what does it look long term? So, the next 3 to 7 years. Despite short term softness, the fundamentals of bourbon remain strong. Global demand will grow once trade barriers ease. International markets, including Europe, Asia, and Latin America, are increasingly embracing American whiskey. As tariffs, distribution limits, and trade restrictions continue to relax, demand abroad is expected to rise steadily, supporting premium bottle prices. Distillers are expanding capacity, a sign of optimism. Companies like Heaven Hill, Buffalo Trace, and Four Roses are investing heavily in warehouses, stills, and barrel inventories. Expanding capacity signals confidence in sustained consumer demand and the ability to support both domestic and international markets. Legacy brands remain cornerstone investments. Blue chip names such as Buffalo Trace, Heaven Hill, Wild Turkey, and Four Roses maintain their reputation, collector loyalty, and historical stability. Even as mid-tier hype fluctuates, these brands continue to dominate the market and are expected to be safe, long-term investments, with their limited releases retaining value better than newer or speculative brands. So my prediction, top-tier bottles will continue appreciating, but at slower, steadier rates. Mid-tier allocated stuff will lose hype permanently. In the retail environment, why are stores still overpriced during a cool down? Even as the bourbon market begins to cool, it's common to still see some jaw-dropping price tags in stores. $80 Weller Special Reserve, $200 E.H. Taylor Single Barrel, $500 Eagle Rare 17. What's important to remember is that high pricing is largely an economic behavior, not a cultural or discriminatory one. Many independent and minority-owned stores operate in high-risk, low-margin markets where liquor sales are a primary profit driver. Margins on specialty and allocated spirits can make the difference between profitability and loss. So why are stores keeping the prices high? Well, they paid pandemic-era wholesale premiums or bought collections at inflated values. During the 2020-2023 bourbon boom, distributors raised prices, and some stores purchased large collections at top dollar. They expected continued appreciation. Now, with secondary prices stabilizing or declining, these stores are holding bottles at the prices they originally paid, often above what current buyers consider reasonable. Dropping prices too quickly could mean a guaranteed loss. They, being the sellers, also assume that customers still believe bottles are rare. For many buyers, rarity is subjective. Stores rely on the perception of scarcity to justify high pricing. Even when bottles are more readily available nationwide, casual buyers or collectors new to bourbon may still believe that paying a premium is necessary to secure a bottle. This allows stores to maintain high shelf prices despite the market cool down. They prefer slow sales at high margin over fast sales at low margin. From a business standpoint, it is often more profitable to sell fewer bottles at high margins than more bottles at near retail or below cost prices. This strategy protects cash flow, covers overhead, and mitigates the risk of unsold inventory. The reality of shelf pricing versus market demand. Store owners are typically the last to react to a market correction. Pricing adjustments lag behind real-world market trends because stores operate on delayed information, existing stock evaluations, and financial obligations. The time frame for price normalization, it can take 12 to 18 months before shelf pricing truly reflects market demand. During this period, you will most likely see highly allocated bottles may slowly trickle down to more reasonable prices. Some bottles may sit on shelves longer than expected, especially mid-tier hype bottles. Savvy buyers who understand the correction can find bargains, but patience is required. High markup bottles are not necessarily bad bourbon. Even overpriced bottles like Weller Special Reserve or E.H. Taylor Single Barrel are high quality spirits. The inflated prices reflect economic strategy, stock risk, and perceived scarcity rather than the actual quality or desirability of the whiskey. While the broader bourbon market is experiencing a cool down, the greatest danger lies in the barrel and small distillery investment space. This is where speculative risk meets long-term maturation, and not all players are equally insulated. So who's most exposed? New startups. Small distilleries with limited capital are highly vulnerable. They often overproduced or took on significant debt, expecting the market to continue skyrocketing. With slower demand, these companies face inventory glut, cash flow issues, and higher overhead per barrel. Contract distillers. Distillers producing bourbon for other brands or private labels may see reduced orders. Many mid-tier clients have slowed down production or canceled contracts due to falling secondary prices and cooled consumer demand. Non-distilling producers. Companies that purchase distilled from other distilleries and age it under their own label are extremely sensitive to market swings. They carry risk when barrels do not appreciate as projected and when sales just stall. Investors who bought young barrels expecting big payouts. The barrel investment craze of 2020 to 2023 promised double or triple digit returns for investors in 2 to 5 years. With oversupply in the 4 to 8 year range bracket, those barrels may not command the projected resale or bottling value, leaving investors exposed. Why this segment is specifically risky? Oversupply of 4 to 8 year bourbon in Kentucky. Distilleries expanded production during the boom, creating a surplus of mid-aged barrels. Many of these barrels are now entering a market where consumer demand is flat, reducing the premium investors and bottlers once expected. Declining barrel resale values. Barrels that once sold for $4,500 to $5,000 on the private market are now dropping to $2,800 to $3,200. This devaluation directly impacts investors, NDPs, and contract buyers who expected a profitable maturation window. Bottlers are pulling back. With slower end consumer demand, bottlers are reluctant to purchase barrels in large quantities. Some smaller operations are delaying bottling, limiting releases, or reducing speculative projects. This bottleneck further depresses barrel prices and slows cash flow. So doing a risk assessment on this. High risk, bourbon barrel investment schemes promising guaranteed returns. New distillery crowdfunding or crowdsourced barrels. Single barrel programs from smaller distilleries. Speculative NDP projects reliant on market hype. These ventures are highly leveraged, susceptible to oversupply, and dependent on short-term secondary market trends. Investors in this category are facing potential losses of 25 to 40% if barrels are liquidated prematurely. Low risk. Legacy distillers with decades of proven operations, Buffalo Trace, Heaven Hill, major brands with global distribution and consistent demand. Blue chip, high-end limited releases like BTAG, Four Roses Limited Edition, Old Forester Birthday Bourbon. These entities are insulated from oversupply because they control their brand and distribution. They can weather short-term market fluctuations, and they produce bottles that retain collector and consumer interest long-term. What are the market implications? Young barrels, 4 to 8 years, are most likely to drop in value due to oversupply and speculative overbuying. Legacy brand bottles and top tier limited releases remain resilient because collector demand is more stable. Current buying opportunities exist for investors willing to focus on retail priced blue chip bottles, true limited editions under market pricing, rare releases from established distillers. So I just had more questions after reading all of that. What bottles will drop? What bottles will hold or rise? And what to buy right now during the correction? So I did some research for you. Bottles that will drop in value, and they've already started to. The bourbon market correction is already hitting certain categories harder than others. These are the bottles most overinflated and likely to continue sliding as the hype fades, supply increases, and consumer demand stabilizes. Mid-tier allocated hype bottles. These bottles were never truly rare. They were marketed as scarce and highly desirable, creating artificial hype on secondary markets. Many of those reached extreme markups during 2020 and 2023 boom. Examples: E.H. Taylor Small Batch and Single Barrel, Weller Special Reserve and Antique 107, Buffalo Trace Store Picks, Maker's Mark Private Selects. Why they'll drop? Increased supply. Distributors and stores have stocked more of these bottles post-pandemic. Allocation has loosened slightly and more bottles are finding their way to the shelves. Less flipping demand. Speculative buyers who drove secondary prices up have largely left the market. Fewer people are chasing mid-tier bottles for a quick profit. The hype wave is fading. Social media FOMO has subsided. Younger buyers prioritize flavor and value over prestige, reducing pressure on inflated prices. So what's the market impact? Weller lines that sold for $100 to $150 above MSRP are now slowly sliding towards $50 to $70 over retail. E.H. Taylor single barrel and single barrel premiums are softening, especially the older batches without extreme rarity. Craft distillery limited editions. Small craft distillers rode the hype wave of the past decade, producing limited editions with flashy finishes and bold branding. Many bottles were priced between $90 to $120 at release, often higher than comparable legacy brands, banking on scarcity and novelty. Some examples would be Wilderness Trail limited editions, Penelope limited editions, Bardstown Discovery, which were newer releases, Chattanooga limited editions, Breckenridge special releases. Why they'll drop? Speculative peak has passed. Many collectors and flippers are returning to more established brands. Smaller brand recognition. Craft limited editions lack the decades-long brand equity of Buffalo Trace, Four Roses, or Old Forester. Once the hype fades, the bottles face a steeper correction. Price sensitivities. Consumers are less willing to pay $100 or more for an unknown experimental bourbon, especially when legacy bottles are more trusted. The complete market impact. Craft limited editions that sold for $120 to $150 above retail may now sit for months before moving at even modest premiums. Finished bourbons that got overpriced. Finished bourbons barreled in secondary casks like rum, cognac, stout, maple, or toasted oak initially sold as novel experiences. Early releases saw large markups, but consumer enthusiasm is cooling. Examples would be toasted bourbon, maple cask finishes, cognac cask finishes, rum cask bourbon, beer stout barrel finishes. Why will they drop? Gimmick fatigue. The novelty of unusual finishes wore off. Enthusiasts are returning to classic, high-quality bourbons. There's a price disconnect. Many of these bottles were sold at $130 to $200, far above typical secondary market tolerance for experimental releases. Selective demand. Finished bourbons may survive in value if well reviewed or from a legacy distiller, but only at realistic pricing. The extremes will not hold. The overall market impact. Expect many finished bourbon releases to drop 20 to even 50% from inflated secondary pricing, unless the release is genuinely rare or from a top tier distillery. Dusty, overpriced store shelf. Shelf trophies. The Dusties. These bottles are often treated like collectibles on store shelves, but have never moved at the insane price tags they've carried. Even classic bottles aren't immune if stores overprice. Examples: $199 E.H. Taylor Small Batch, $299 Eagle Rare 17, a $500 Blanton's Gold, an $800 Old Forester Birthday Bourbon 2020 to 2022 batches. Why they'll drop? Market forces catch up. Stores that set extreme prices cannot sustain sales indefinitely. Consumers will wait, look elsewhere, or simply walk away. Overstocking risk. Bottles left unsold for months or years tie up store capital. It incentivizes eventual price reduction. Secondary normalization. As secondary market prices stabilize or fall, store shelves must eventually reflect the real market value. The overall market impact. Many shelf trophies may sit unsold for years, forcing steep markdowns. Overpriced bottles without historic collector cash or rarity will eventually align closer to secondary market norms. Bottles that will hold or rise in value. While some categories are cooling, certain bottles remain resilient or even poised to appreciate, making them the safest bets for collectors and investors. These are typically true limited editions, blue chip releases, or historically established single barrels with strong collector demand. True limited editions. These are bottles that genuinely live up to the limited edition label, scarce releases from legacy distillers with proven secondary market demand. Some examples would be Old Forester Birthday Bourbon, Wild Turkey's Master Keep, Four Roses Limited Edition Small Batch, Elijah Craig Barrel Proof, A Series, older batches, Booker's batches from pre-2020, Michter's 10-year. Why they will rise. Real scarcity. Unlike hype bottles, these are produced in genuinely limited quantities. Collector demand. Established fan base ensures ongoing demand regardless of market fluctuations. Proven track record. Historical sales data shows that these bottles appreciate over time, especially when kept sealed and stored properly. Anything BTAC, which is, as you know, Buffalo Trace Antique Collection. BTAC remains the gold standard of collectible bourbon. These bottles have a worldwide following and consistently command premium secondary prices. George T. Stagg, William Weller, Thomas Handy Rye, Eagle Rare 17, Sazerac 18. Why they will hold or rise. International demand. Collectors from the US, Europe, and Asia compete for each release. Extremely limited supply. These allocations are tiny relative to demand. Brand reputation. Buffalo Trace is a legacy distiller with decades of consistent quality. Even during market corrections, BTAC bottles rarely drop significantly. They are recession resistant in bourbon terms. Pappy Van Winkle long-term stability. Pappy Van Winkle may experience short-term softening during corrections, but its long-term collector base remains extremely strong. So some notes just to think of. The Pappy bubble down 10 to 15% from peak secondary highs, but still significantly above retail. Bottles like Pappy 15, 20, and 23 maintain global recognition and historic prestige. Why they hold or rise. They have a cultural icon status. Pappy is synonymous with ultra-rare collectible bourbon. Finite supply. Annual production is tiny, and barrels from pre-2000 releases will never be reproduced. Collector loyalty. Strong secondary demand persists even during general market cooldowns. High-end Wild Turkey releases. Wild Turkey is undergoing a renaissance, producing high quality, collectible releases that are gaining both domestic and international respect. Examples: Master's Keep, the age limited editions with complex flavor profiles. Russell's Reserve Limited Edition, carefully curated small batch releases that appeal to enthusiasts and collectors alike. Why They Hold and Rise. Reputation Rebuild. Wild Turkey's new releases are consistently praised by critics and connoisseurs. Scarcity. Limited editions are still produced in small batches relative to demand. Global market appeal. International collectors increasingly recognize Wild Turkey as a serious premium brand. Single barrels from legacy distillers. Age-stated, single barrel selections from established distillers remain a cornerstone of collectible bourbon. These bourbons are individually curated, providing a unique flavor profile with true scarcity. Examples: Four Roses Single Barrel, Wild Turkey Single Barrel, Heaven Hill, Elijah Craig Barrel Proof Single Barrels. Why do they hold or rise? Consistency of quality. Legacy distillers have decades of experience producing barrels that meet high standards. Unique profiles. Single barrel variability creates collectible diversity. Each barrel tastes slightly different. Collector demand. Even during corrections, single barrels from well-known distillers maintain strong resale value. So what should you buy right now? What are the best deals in the correction? With the bourbon market entering a correction, some bottles are temporarily undervalued, presenting opportunities for collectors and enthusiasts to grab high-quality pours before prices rebound. Focus on bottles with proven quality, strong collector demand, and realistic pricing will just work for you. Some examples would include Four Roses Single Barrel Store Picks, aged 9 to 12 years. Elijah Craig Barrel Proof, Batch A and B. Russell's Reserve Single Barrel and Store Picks. Old Forester 1920, 1910, and 1897 series. Jack Daniel's Single Barrel Barrel Proof, number 27 Barrel Proof. Four Roses Limited Edition if you can get it under $300. So the overall market prediction for 2025 to 2028, the bourbon market is entering a period of correction and realignment. Understanding the short and mid-term trends can help collectors, investors, and enthusiasts make some smarter purchasing decisions. So for 2025 to 2026, it's going to be a continued correction phase. Secondary is softening. Stores are still overpricing. Barrel glut grows. Oversupply of 4 to 8 year old bourbon barrels means small distilleries and NDPs face tighter margins, fewer sales, and potential operational issues. Collectors are cautious, speculation cools, and buyers prioritize value and taste over hype. From 2027 to 2028, we should see recovery and selective growth. Older age-stated bourbon becomes more scarce. Demand rebounds. Premium bourbon climbs steadily. Poorly run craft distilleries collapse. The winners, legacy brands, age-stated bottles, BTAC, Wild Turkey, Four Roses. Losers may be mid-tier allocation hype, overpriced craft distilleries, finished gimmick bottles. But from a business perspective, from a marketing and investment standpoint, this correction is fascinating. Private collectors and high-end flippers have had to reassess their strategies. Some are stuck with overvalued inventory, while more discerning buyers are targeting true value. I personally despise flippers, the people who swoop in at MSRP only to resell for profit, often to buyers who won't even enjoy the bourbon. Flipping may be profitable in the short term, but it undermines bourbon culture and contributes to artificial scarcity. Hopefully, the current market correction teaches a lesson. So some exact bottles to avoid. By category. Mid-tier allocated fake rare. Examples: E.H. Taylor Small Batch and Single Barrel, Weller Special Reserve and Antique 107, Buffalo Trace Store Picks, Eagle Rare unless it's at MSRP, Blanton's single barrel. Blanton's Gold, overpriced unless it's under $150. These bottles were never genuinely scarce. Secondary premiums are mostly fueled by hype and speculation. They are now correcting, and overpayment is a risk. Toasted maple or finished gimmick bourbon. Why should you avoid it? Oversupply plus trend fatigue equals big corrections coming. Finished bourbons may still have collector value if executed well, but most overpriced variants will drop sharply. Avoid it if it's over $100. Barrel Seagrass variants, Brothers Bond finished barrels, Woodford Reserve chocolate rum cognac finishes, average craft distillery toasted bottles, Penelope toasted if it's more than $80. Consumers are tired of gimmicks. Unless the finish is from respected legacy distiller with a consistent track record, these bottles will struggle to retain secondary value. Craft distillery limited editions. Why should you avoid it? Oversupply, inconsistent quality, and weaker collector demand. Only buy if you are a fan of the brand or the barrel, not as an investment. Some examples would be Chattanooga, Breckenridge, New Riff Special Finishes, Bardstown Fusion, Discovery, newer releases, High West, Midwinter, quality is inconsistent. Smaller craft releases often spike briefly in price due to novelty, then flatten or drop once the hype fades. Collector and secondary interest is generally shallow compared to legacy brands. Storefront trophies, those overpriced bottles that don't hold value. Why should you avoid them? These are the bottles stores treat as an investment, but they rarely sell at inflated prices. If you see these overpriced in an independent shop, walk away. $199 E.H. Taylor small batch, $300 Eagle Rare, $500 Blanton's Gold, $800 Old Forester birthday bourbon, $250 or more Maker's Mark Private Select store picks. These are the classic examples of overpriced hype bottles. They will either sit on the shelves for years or eventually be discounted to reflect a realistic market demand. So we've talked about what not to buy. What are the exact bottles that you should be buying? Russell's Reserve single barrel, Jack Daniel's single barrel proof, Four Roses single barrel, and those are those store picks, OESF, OBSV, OBSK, so on. Elijah Craig barrel proof, Old Forester 1920, 1910, and 1897 series. And then a long-term investment, which would be 3 to 7 years. Four Roses limited edition small batch, Old Forester birthday bourbon, Wild Turkey Master's Keep, Michter's 10-year, Stag Junior or Stag, whichever you prefer to call it. So what are the elite investment or blue chip bourbon? These are the bottles that are recession-proof and correction-proof, and even during market downturns, they retain or increase in value. BTAC, Pappy, Four Roses, 16 to 20-year private selection. All right, Bourbon Hunters, that's a wrap on today's market breakdown. Remember, we're in a correction, not a crash. Now is the perfect time to be smart, patient, and strategic with your buys. If you want the full, easy-to-use buy and do not buy list, I've got you covered. You can check the description below, copy and paste, email it to yourself. That way you can reference it anytime while you're out hunting for your next bottle. Stay sharp, sip wisely, and I'll see you in the next episode. Happy hunting. And that's another pour down. If you enjoyed hanging out in the hunt today, don't leave me standing here like an empty bottle on a Sunday morning. Smash that like button, hit subscribe, and drop a comment about what I should track down next. Remember, bourbon may age gracefully, but my YouTube channel only grows if you feed it. I'll see you in the next hunt. Cheers, Bourbon Hunters.